Growing an insurance agency on Autopilot is likely a lot simpler than you think. That's not to say it's easy, but it's a pretty simple process. And in this video, we're going to outline step by step how to do it. But before we get into it, my name is Tyler. I'm the owner of a company called ScaleOps, and as well as a company called AgencyAid. And we have worked with hundreds of insurance agencies at this point to help them grow their book of business. We've contributed to tens of millions of dollars in written premium, and I've learned a little bit along the way. And so today I'm going to break down a few myths that a lot of agents feel like there is in the industry. So, yes, writing business is a difficult thing to do. Carriers are constantly changing what types of business they allow, if they're going to let you write monoline. There's a lot of just misunderstandings about writing business and personal lines. And today we're going to try and cover a little bit of that. So, who this video is for, this is for the average personal lines insurance agency. So, most of what I do is tailored to independent agents, but everything applies to captives as well. And so, I hope this is beneficial for you. So, the first thing you need to think about when you think about growing your book of business somewhat on autopilot is, where do you best spend your time? There's lots of things you can spend your time on in your agency. So you can be picking up the phone and cold calling, and you're going to spend a ton of your time talking to people that are not interested or getting hung up with, or even just sitting there waiting for the phone as it dials. So that's maybe not the most efficient use of your time. You could potentially try networking. You can go to BNI groups or different local networking chapters, chamber of commerce, etc. Kind of the same problem there, though. You're going to find a lot of people that are kind of tire kickers, or they're new in business themselves, so they can't really help you out. So that's maybe not the best way either, but referrals are on the right track. So how do you go about doing that? And so in this video, we will talk through my favorite way to do it, and that is through lender referrals. So typically in the insurance industry, referrals close at 70%. So that's going to be a lot higher than any other close rate for any type business you have. So if you're just reaching out to clients, if you're cold calling prospects that you find on Collect States, you're going to have 1%. Maybe that's if you're doing really good. Referrals are going to close at 70%. So if you've got somebody that refers you a piece of business, you've got a really great shot at writing them. And loan officer referrals are about as great as they can come, because these people have to buy insurance today. They may or may not already have somebody that services them. The average referral, if somebody's coming in for car insurance, they probably already have car insurance. So you have to remove them from their current agent. You have to get them to fire them and then come to work with you. For loan officers, they may or may not already have somebody they work with, but regardless, they have to buy in order to close on their new home. So you've got a really great shot. So let's say for the case of this scenario, your referrals are going to close at 70% from these lenders. It should be higher. Now let's look at loan officers. The average loan officer is going to refer 2 to 3 loans per month. The average lender closes about 1.5 to 2.5 loans every single month. So we just kind of rounded a little bit. So 2 to 3 loans every single month that they're referring for insurance. Now, obviously, they're working on more, so you're going to get more quote requests. You can potentially start the relationship with these people and get their auto. That's why I rounded it up a little bit. But again, average lender is working on 2 to 3 loans per month that they have to have insurance for. They can't even go through the process of getting the final loan until they have these quotes. So you're a pivotal piece, and you are an asset to the lender. You need to see yourself that way. But what we're looking at are the good loan officers, and a good lender is working on 4 to 8 or even more loans every single month. And so that's really where you can start to make the money. So 4 or 8 every month. So you're getting 1 or 2 new policies per week. And so, yes, depending on the state, the premium for a homeowner's policy isn't going to be that great, but you have to see that piece of business as potentially 3 or 4 additional lines. So for that home, you've probably got 2 autos because you've got a husband and a wife, and then you've got an umbrella. Then you've got personal articles because they probably have a diamond ring or who knows what else. Potentially toys like HVA or not HVACs, ATVs and things like that. So you have a lot of different opportunities to increase your value on that account, earn more commissions. Obviously, the goal is to help people, but this is how you start to turn it into a profit center. So let's go into it. Let's say your goal is you want to write 10,000 in commissions every month. So you want to get 10,000 in revenue every month from new business. We're not going to count your renewals. That's just mailbox money, and that helps pay for everything else. So 10,000, let's be real conservative. Let's say that you're getting paid at 12.5% from your carriers. Average, if you're an independent agent, you should be getting 14 or 15%, depending on aggregator splits and things like that. Sometimes you're getting 10% if you're going non-standard, but we're going to average it out and say 12.5%. So if your goal is 10,000 in revenue at 12.5% commission, that means you need to write $125,000 in new business. Hopefully everybody's following. 12.5 times 10,000. That's going to put you at 125,000 in new business. All right. So here we're going to have to draw an assumption. Let's say the average household is $5,000. We're going to try and be real conservative. We'll call this premium, just so you know, we're talking the same language on everything. Average household is 5,000 in premium. This should be low end for most people, but we want to make sure the numbers work for every single person. So at that math, you got to write 125,000 in new business. Your average premium is 5,000 per household. That comes out to 25 households that you have to close. All right. And at a 70% close, you're going to have to quote 35 households per month. 35 households per month. So you're working on a little more than 1 quote every single day. Now, if we're doing work days, you're working on 2 quotes per day that you're in the office. Let's say you don't have a VA, you're working on this. So you spent 2 hours quoting. Worst case scenario. That's not too bad. All right. So out of these 35 quotes that you've got to work on, if we go back up and look at the numbers, we're going to go with average lenders. And let's go with the low end. They're referring 2 loans per month. So if we do 35 divided by 2, that's 17.5. So let's do some simple math here. You need 17.5 lenders referring you business to get to that 35 number. So let's call it 18. You need 18 loan officers to get to 10K in commissions. That seems pretty reasonable. So how do you go get those 18 loan officers? Now, there's lots of different pieces of thought there. My company, Scale Ops, we help you do this. We charge on a per appointment basis with lenders. We try to do everything in the interest of an agency. So you only pay us for appointments that actually show up with loan officers, and we will fill your calendar if you'd like. There's a lot of different ways to do this. If you go in Facebook groups, you can pretty quickly just search mortgage or loan officer in local groups, and you're going to find lots. Again, if we go back to the networking scenario, every single BNI group is going to have a real estate agent and a lender. Odds are you probably have a realtor that you're friends with. You can reach out to them and say, hey, you probably get hit up by 15 loan officers every other month. who should I talk to? Who's actually doing business? And they can get you in with some of those good ones. So you're getting 4 to 8 per month rather than 2 or 3 per month. So there's a lot of opportunities to start doing business pretty quickly with these lenders. So if you do some simple math, let's say you can actually sit down with 3 lenders per week. All right. So that's 12 lenders per month. That's 24 over the course of 2 months. If you can start a relationship and get half of those to start working with you, you just got 12 new lenders. You're almost to your goal. If you work for another month, you hit it. So in 90 days, you could have an agency that is generating $10,000 in commissions every single month. Now, obviously, months like December and January are going to be slower towards the winter and Christmas time. The market gets a little bit weird, but this is going to be pretty steady. And these numbers, these are averages. So some months during the spring and summer, the lenders are going to be doing more business. So that math does balance out. But you're 90 days away from having the agency of your dreams that writes business easier than what you've been doing. So again, it's not an easy process. You have to go grind for at least 90 days. You have to go meet these people, you have to build relationships, and you have to show value. You have to show why they need to work with you and work on your differentiator. So why do they work with you rather than the 100 other agents in your town? Now that's the piece you have to think about. I've just done the math to show you why you have to do this. You figure out why they need to work with you as opposed to somebody else. But I hope this broke down some mental barriers for you. I hope it helps you figure out how you can go about growing your agency this year. If you have any questions, comment below. I'd love to be able to help you. Please like and subscribe, and we will see you in the next video.